on Monday. We're at 12:30 GMT now, and we're looking for the week ahead in markets, and we're going to cover some of the major market charts that's offered through LCG. Any questions at any point, just feel free to send them through the chat box, and I'll answer them as I see them. So I'm going to hide myself away, and we'll focus ourselves on the some of the key price levels and trends that I see taking place in the markets. So, yeah, these are the markets I typically tend to follow, all 8 of them. A range of sort of forex indices and commodities, but certainly look a bit beyond this when there's an opportunity. Typically on a sort of longer time frame, just don't have the ability to check all the markets all the time. But I think starting with the euro is normally where I start, and actually I think that's one of the more interesting charts to look at the moment. Well, basically, as I mentioned in my comment section here, the head and shoulders pattern is in motion. It's broken the neckline. It's been consolidating. We're looking for the pattern to complete. It has completed, and we're looking for it to meet its pattern objective, which would be somewhere in and around the support at 115 or perhaps 113 level below that. Let's jump over to the platform and have a look at that. So this is our daily candlestick chart of euro dollar, and you know, you'll recognize this line that I brought in from last week, which is basically the height of that pattern projected to the downside, and you can see we've come up, we tested that old low here. You know, I've had the round number joined in, but really we've come up in between the round number and that low there, and we've successfully held it so far, and we're starting to roll over today. We're coming into the low of the last few days. Should we take out that low, then obviously the breakout looks like it's going to have a bit more legs. So the moving averages are all lined up. The market is stuttering a bit. It's still so far held out of oversold territory, but nonetheless the RSI is well into a sort of sell area of the market, if you like, obviously under the 50 level, and no real signs of divergence that would worry me on this daily chart. On the weekly chart, you know, it looks like we've been in for a correction of this big move higher. Now we're wary of the fact that there's been this old trading range, and we're savvy to the idea that maybe 115 could end up being the former resistance turned into support, or indeed maybe we drop a bit further down to some of these spike highs we saw in around 113. But maybe at this stage, just expecting maybe the correction to go a little bit further, but still maintaining a belief that actually we're in for perhaps longer term higher prices in the euro. That's the way I'm viewing it at the moment. So if we jump back to cable, the pound against the dollar, I'm basically still seeing it in a trading range. We had that massive drop last week, obviously, after the Bank of England raised rates, but basically said they weren't going to do it again. I mean, it wasn't quite that overt, but look at the market reaction, it almost was. So obviously went straight down to the bottom of that trading range, but we've hovered around there. We've been holding the lows. So we're still in the trading range, and so the question for me still remains, is 130 about to give way? 130 is a big round number, and it's also that long-term rising trend line. So it's actually a bit of a confluence of support coming in here. I think this low, depending on exactly where you want to draw it, whether you want to draw it through this low and maybe a bit closer through the bodies of this one, or just use that one. Basically it's in and around the 130 mark. So if we get another drop, take out this support, then yes, it will be a breakout, but I wouldn't be surprised if it ends up being a false break, come down to 130 and then a bounce from that confluence of support, and maybe that's the correction done. That's a distinct possibility, that actually we just get a little test of 130, and then the longer term uptrend is able to resume itself, because yes, the market dropped after the Bank of England, but did it drop way through that low? Not really. There was still a distinct amount of buying interest. I mean, it closed right at the low on the day, but the last couple of days we've headed higher. Again, maybe these people are getting a little ahead of themselves, depending on where you put your stop loss. But another little rundown, test the interest of buyers down here. Basically, we're in a trading range, and if we get a solid break and close down at 130 or below 130, that for me will be probably the bullish scenario out the window for the time being, and I think that's quite significant. The confluence of support to me would tell me that would probably pretty swiftly move down to 128. So that would be an interesting scenario should it happen. But equally, should we get a retest of the 130 and then we finish off the lows for the day, that would maybe be, again, an interesting scenario, because we may be headed right to the top of the trading range again, around 132.50 / 133 really. You notice how there's basically, I've drawn 113 because I think it is the big round number, but in terms of the trading range, you'll notice it's basically sort of 50 pips around the top and the bottom, sort of here, and then 133 at the top. Is kind of the kind of zone of resistance, if you like, between those 50 pip numbers. So we're kind of, with the benefit of hindsight, obviously sells up here and buys down here in this zone have worked pretty nicely, and it may still do again, because we're kind of edging out of the zone now, heading potentially up towards that top zone again. I wouldn't be surprised, as I say, to see a little flush out the bottom and then a retest to the top. It's a trading range, so the high probability trades are buying at the bottom, selling at the top, but it's been going a while now, so you'd imagine this the breakout has to eventually come. Let's switch gears to dollar yen. This has actually been probably the more interesting currency of the day. You might see me mention it on our Facebook Live, that we hit 8-month highs in dollar yen, obviously 8-month lows in the Japanese yen. I haven't really changed the numbers from last week, because it's still a bit of a question mark as to whether the top of this range holds. So we had that big spike up to 8-month highs in dollar yen. Now we've come and test just in the last few minutes, we've seen lows of the day. So were we to finish like we are, a bit of a false break. So it'll be interesting to see. The way we've closed today could be quite instructive as to where dollar yen goes over even the next couple of weeks. Bit of context to it was Trump over in Japan. Obviously, should Trump be successful in forcing better trade terms between the US and Japan, that would necessarily mean a smaller trade surplus, and typically currencies with a higher trade surplus are valued more, with a higher trade deficit worth less. It doesn't always work like that. Just look at the pound. So if we switch back to this chart again, I've still got that support down at 113. I said the same thing last week, and if we zoom in a bit, you can see that it never quite got down to the 113 support. Basically, we pulled back. That was the start of the week. Got up towards the highs, pulled back to the 113.50 mid number, and then we've kind of stalled a bit for a couple of days and made another little run at it today. So obviously the 114.50, well, I've got 4 in there, is really that's what we're looking at the moment. Does this break hold? For the moment, it's not, and maybe factor that in along with a bit of kind of bearish divergence in the RSI, maybe a sign that the this little uptrend is running out of steam near that long-term resistance. So what would I need to see? I mean, if you're being conservative, you just want a kind of reversal-looking candlestick. This is one kind of pattern, but if it closed lower for today, that would be an extra strong signal in terms of daily candle patterns. That'd be on the slightly more aggressive side. Maybe if you look for a breakthrough, the 113.50 is a round number to watch, and then obviously you've got the 20-period moving average and the 113 levels as supports that could break to indicate that actually this top of the range is holding. Switching gears to the indices, so you saw that we had a big drop in the FTSE earlier on today. That was mostly pre-market. I think we did open lower, but we pretty much bounced back since. And now we're holding above that 75.50 level, which is basically, again, 75.50 up to the 7,600 level. Is basically the top of the trading range that we're looking at. Obviously 7,600 pretty much being the record high. It looks good for challenging at the moment, and if you're watching, we'll have a look at the DAX in just a moment. You'll see that actually there seems to be some demand for European equities at least. So if we pull out onto a weekly chart, we can see that we are within a trading range in a generally upward sloping market, and on a weekly basis we pulled down to that 7,450, and we've managed to pull back from that decline so far. If I can zoom in a bit there, you can see that that's where we dropped. That was the old resistance, powered back through it, retested that resistance 2 weeks in a row. Now we're back up and above the top of the range on that shorter term kind of daily basis. So it's all configuring a bit for me for a run at the record highs and perhaps a move beyond. You can even, if you were so inclined, draw a little sloping trend line through here and say that that's been successfully retested as well. So I mentioned that DAX chart. Maybe I can move that here. There we go. So we've had we've actually powered higher in the DAX. I mentioned last week 13,300 as being the resistance. We did pause at it for a day, but barely, and we powered higher by another 150 pips or so in the following day. So now basically it's the 13,500 big round number that's causing the index to pause a little at the moment. But yeah, of course the market's looking overstretched, but you don't necessarily want to be you don't want to be betting against this kind of strength. For me at the moment, it's a really strong uptrend. Bit difficult to find areas of support, other than you'll notice that it seems to be lurching in sort of 200 pip motions. So if you see this, the height of this range was about 200 pips, and then we kind of staggered higher for a few days where these few candlesticks were about in the sort of top of a 200 pip range, so around that sort of 12,300, I'd say. So we sort of went from 13,100 up to maybe sort of 13,300 as I'd pointed as the resistance, and then we surged another 200 points up to 13,500. So that by that same logic, if we're going up in stages, then 13,700 would be another one to look for on the top side. 13,500 is a big number that obviously institutions will be targeting as well. But I think if we scale out again here, basically we've broken out. That was obviously the resistance from last year, from 2015 almost, and we tried to pull back in with the range, but we held the big 12,000 level and we've rallied up from there. So it's looking very bullish for the market at the moment. Of course, be careful at overbought levels, particularly on the short term, which we are a little bit at the moment. But structurally, overall, it looks very favourable. Breaking out to new highs is positive, guys. It's positive for the market moving higher. It's not, it's not a point of concern. So moving gears to Wall Street, and a kind of similar idea here. We've had a bit of a kind of box breakout. I pointed out to this box. We closed above it on a daily basis last week, and we've been testing the old highs for the last couple of days. But at the moment, you'll see that on my PDF here, I'm basically using that old range, top of the box high, 23,450, as the breakout of the box, and 23,650 with a similar kind of logic of 200 points, with this box being, you can see the base of it was basically 23,250, and then the top of it was, I think, 23,450, was it? Yeah, thereabouts. So then again with that 250 to 450, maybe looking at 650 on the top side. But if we do dip back into the box again, it's not certainly won't be catastrophic, but maybe you know, it's an obvious sort of first area of support, and then you'd be again looking at that 23,250 as perhaps a bigger area of concern. Should we drop through there? You'd be pulling back from your bullish bias at that point, because it's also the 20-period moving average. You'd be getting wary, but equally, you know, if you go back, you know, pulling back to the 20-day moving average has been an opportunity. Oftentimes staggers around there for a bit, but eventually moves higher. So nothing at this point to get too worried about. Now if we switch gears to gold, basically this, I think I said 1262, 1261 has been, that's the real bottom, but I'd call it 1265 as kind of round number that gold's trying to push down through. It's still in a range for me, and you know, it's you know, it's looking relatively strong. And again, if you go back to non-farm payrolls from Friday, which caused that drop in gold, it's generally kind of a bit of a disappointing headline number in non-farm payrolls, but actually it was overall, yeah, with the wage growth is a bit soft, but overall shows that the economy is kind of weathering the hurricanes just fine, and not really denting those chances of a December rate hike. But gold, you know, basically still held the lows, a bit like that. Just contrasting the news and what the price has done. You know, similar with gold, similar with the pound. Got that sell-off, but you know, hasn't taken out the lows as of yet. Still could, of course, but just that initial reaction shows a bit of buying interest. So we'll have to see how this translates. It's a fairly clear-cut resistance at this point, that 1280 plus the 20-day moving average. To me, would be indicating the you know, we're coming out the other side of this this downturn, and actually we're going to push up to the top of the range, which is, yeah, basically 1300. And then that will obviously be the next test before we can decide whether we push up to 1350 again. Last but not least, Brent, also one of the more interesting markets. This was this random looking line here was what we'd projected last time in terms of potential target around 65. Based on this downwards trend line break, and you know, we've been making pretty good progress to it so far. Just on a shorter term basis though, something to be a little bit savvy to is if you use basically a kind of fractional idea where the market's doing similar sort of things on different price time frames. We've also reached a bit of a target here around the kind of 62 level, based on just the height of that little level. So we've actually pushed through it, which is positive, but just be savvy that maybe we get a pullback from around 62.50, the current levels, with the next support coming in at basically the 60 level, those lows there. And so that's why I've said in the support around 60, you know, pull back to the big round number. Could attract some interest, and that's where we had those two kind of spike lows before. And again, that 65 level was potential resistance based on that breakout. So again, there's those kind of spike lows there around the 60 mark. Bear flag in gold. Are you talking on a shorter time frame, like a or much longer time frame? Because you could, I suppose you could be looking at this sort of thing, like that. To me, that's not the strongest trend for it, and then this is not too distinguishable from on the daily chart. Well, I honestly wouldn't categorize it quite as so. I mean, for me, the flag is normally a fairly something like this does look quite flag-like, but there's not been a really obvious preceding trend. For this, to me, is not really a decent rally of a trend. Let me something like a bear flag for me would be something more like, so we've had like the big downturn here from the high, and you've taken out a few lows, and we're below the 20-day, I suppose, to be honest, it's not a million miles away from the current situation, is it? But sure, I mean, you know, this little move, then a sideways consolidation, then a break lower. Yeah, I mean, you could call it that. Just for me, the only reason I'm hesitating basically is that I wouldn't categorize this as a particularly trend-like environment. And then for this, I guess you'd need another rally up to 1300 for this kind of move down to be kind of, but that to me would almost be too large of a price movement to be a flag. But you know, the thing is with bear flags and pennants and triangles, and you know, obviously there's different names for it, but I guess ultimately you're just trying to determine how the market looks, and you know, whether that's going to be a continuation or a reversal of the consolidation. Obviously, from what I was saying before, you know, I'm beginning to lean towards the camp that maybe it's not the kind of environment that looks like a continuation pattern. It's starting to look more like a basing reversal type setup, just because that 1265 seems to be holding despite some quite bearish news. So yeah, so a bit of a wishy-washy answer. I hope that helps. So I think I'm going to call it a day there, chaps. I don't want to waste your time. I think we've got through the crux of it. I hope that was useful. Good luck with trading this week, and I'll sign out from here. Thanks very much.